I have zero investment in silver. And I have heard that when silver going to reach 100 to 125 in February, then sell it. And I know certainly that JP Morgan is sell silver. If you have confidence in this crap, then rock and roll and hoochie coo and sell your silver. I'm not. And I don't care what it does in terms of dollars. I'd say the same thing about gold.
We know it's going to go higher than the target. You're not supposed to sell the exact top. When you look at this on the 6-month chart, you will have sold exceedingly close to the localized high, and we'll get back in. It did dip below the interim. On even the 4-hour, you can get back in lower, and you can be closing into this little bit of overperformance and the relative high. $25 and back again as we were breaking the primer. That is a classic. That is such a classic. I think he's going to call the last time you could have bought at $25.9 before running 1,200, maybe 2,500, literally 100x. I think that will go down as the dollar maximalists.
As silver speculation intensifies around bold targets like $100 to $125, analysts Lynette and Francis urge investors to focus on strategy over hype. With major institutions reportedly selling into strength, the discussion shifts from price obsession to timing and discipline. Hunt emphasizes that investors are not meant to sell exact tops, but manage entries and exits around localized highs. Zang echoes that precious metals remain long-term protection against currency debasement, not short-term trades. Historical breakouts near key levels like $25 highlight silver's explosive potential, but only for those who understand cycles, psychology, and patience, not dollar maximalism. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
I have zero investment in silver. And I have heard that when silver going to reach 100 to 125 in February, then sell it. And I know certainly that JP Morgan is sell silver. If you have confidence in this crap, then rock and roll and hoochie coo and sell your silver. I'm not. And I don't care what it does in terms of dollars. I'd say the same thing about gold. I don't care what it does in terms of dollars, because we all know this is what they're doing to the dollars. So why would you ever want to convert it back into those dollars unless you had to do it to convert it into an income producing asset? I think that is very short-sighted. I don't think most of Wall Street understands what money is, and certainly what this stuff is. And by the way, I will bring up the fact that there have been five gold, there have been a bunch of gold revaluations in the U.S. They did it in 33. They did it again in, I think, 40 or 41. They did it again in, after that, and there have been 5 confiscations in gold, with the last one 1971. I was alive. And it's interesting that I didn't even really think about that because the spin was so good. Nixon closed the gold window. Well, nowhere in there is the term confiscation, but that's what he did to the rest of the countries of the world whose gold we had promised to deliver out to them when they sent in dollars. That is a confiscation. So, just accumulate it, and don't worry about what it does in terms of dollars. I don't. Then I'm just ready. And you also need food, water, energy, security, barterability, which for me is primarily silver, but anything physical is barterable, and wealth preservation, which for me is primarily gold, but having community and people around you that love. There's all different kinds of wealth, more than just monetary wealth. Community brings all of that together. And of course, you need a place to make your last stand. So I don't want you to have such a narrow focus that you lose sight of all of the things that you need to be self-sufficient and independent, and therefore go through this reset in a reasonable way. And dare I say it, come out the other side better than when you entered. What a concept for the public to finally have the wealth shift their way in these created crises that really are not necessary. When we were on the gold standard, we did not have booms and busts, just like you saw on that 15-to-1 steady ratio. We did not have booms and busts. We had ebbs and flows. But with the central bank, they are really working hard for us to think that they're independent when they really are not. I think I did a video on that, because who creates that? Congress legalizes the central banks. So what? You don't think they're going to take their pound of flesh to give them all of this power to create money? Of course they are. So it's just kind of a joke, but they don't want it to be obvious. And it's very interesting what continues to happen with the central banks. I don't think they're as independent as they want you to think they are to begin with. And shortly, they will be even a whole lot less independent. You better have your gold and silver. Don't sell it, because you won't know 1 second before you've lost all of your choices. Accumulate it. And it's still dirt cheap. Accumulate it. And you can certainly see pretty clearly that red line, that silver has moved exponentially faster than spot gold in this longer term relative performance chart. And this is just another one, a shorter term, where you can see where that diversion really took place, right? So this is everything this is about, is giving you the tools to make educated choices. And if I don't think we've done one. So we'll get that done. Just look for it tomorrow. It'll be less than a minute. It's not going to take very long. And this is the gold to silver ratio since the beginning of 2025. And you can see how that has gone down, right? From 105 in April of 2025. So testing that resistance level on the top, to whatever it is right now, 66, 68 to 1. But I've also told you many times that we will see that ratio grow more narrow. And then once we go into hyperinflation, then it changes again and it'll grow wider. So I pulled up the data from Weimar Republic in Germany, and not because that's the worst case, but because it's the most well-known case. And this is the data that I pulled on what happened to spot silver during that period of time. So this is 1919 and 1923, and it went from about 150 marks to an ounce. So it definitely enabled you to continue to buy food and whatever else you needed on a day-to-day basis. And it's why I like silver for barterability. But here is what happened to gold during that same period of time, or the spot gold market. Same period of time. That started out at 110 marks per ounce of gold and went up to 10 trillion marks per ounce of gold.
Financial strategist Lynette Zang emphasizes accumulating gold and silver rather than focusing on short-term price moves. She warns that major banks and central authorities can manipulate currencies, referencing historical gold confiscations and the 1971 closure of the gold window. Zang advocates for physical precious metals as wealth preservation and barter tools, highlighting silver's utility in everyday exchanges and gold's long-term value. Beyond money, she stresses community, self-sufficiency, and essential resources during economic resets. Historical data from the Weimar Republic illustrates silver and gold's ability to maintain purchasing power amid hyperinflation, making accumulation a critical strategy for prudent investors today. Let's get back to the interview.
In terms of silver, where those key levels. So this is one of our brokers' accounts. I love the integration with, by the way, the trading view as well. So it's kind of useful that you can see legacy entries that were down here on the last continuation pattern. There they are, and they're sitting well and good thanks to the subsequent price move, more in the last continuation here, and then you can see take profits over here. I want to go lower time frame, and I want to highlight something to you. In fact, first I want to go higher time frame. Let's go to the 3-month chart. In fact, do we need a year? Maybe we need a year. Let's leave it on a year. Let's maybe get a historical chart that has more history. So I need to let go of the broker and go back to Oanda, clean our face here. Let's go back to sharing the screen, shall we, before the guys lose their heads about me being stupid again, prone to do, and have a look at that. There we go. There we go. So the difference in the candles that you're seeing here is they've weighted by volume. They've been weighted by volume. Notice anything? Let me just reduce the clutter for you. Do you notice anything? Weighted by volume, candle charts. Who likes a big pippy? Well, you know, not me specifically, I have to say, but that's some candle. That's some fat boy right there. And it is, of course, a triggering event for macro upside HVF. There you go. There you go. And there you were getting it. By the way, there's that. The Brent Johnson headless chickens pilgrimage to the $25 and back again as we were breaking the primer. That is a classic. That is such a classic. I think he's going to call the last time you could have bought at $25.9 before running 1,200, maybe 2,500, literally 100x. I think that will go down as the dollar maximalist's highest peak dollar maximalism. I'm not sure I can let him forget that. It's like Brown's bottom. It really is. Make the most of what you have. A method will serve you. Managing losses well will serve you. Being positioned at the best possible times for maximization of HVFs will serve you. The law of the parabola was where I started, and it's where I will finish. That's what makes that 7.5 100 mil. Being in there for the last 10, 15% and getting the 85% that goes with that. That's it. Doesn't matter where you start. If you think you're too late, you're not. You're not. The best is yet to come. There may even be pullbacks. You may even get a little bit lower, but rarely will that be the case. When we get on our bike again and really get pedaling after any pullback, and I don't know how long that'll be and how deep it will be, I can't tell you. I'll watch and I'll wait. I'll let the market tell me when it's ready. It might not happen to a big degree. It might only be a day. It could be a week. It could be more. It could be months. But when it is, I will be there and I will be leaning hard. And then, friends, then you go to 333 and you're still not in the last 10%. You're still not being there in the last 10%. You know, you could see 4 digits. So I didn't do the gold-silver ratio. For me, gold-silver ratio, the close for silver is single-digit gold-silver ratio. I don't need to show you a chart for that. And within that, there's potential for overperform. Because mining currently is at 6.9, it will take quite a lot to get that up. It's a byproduct in 60+% of supply. Between 60 and 70% silver is a byproduct. So only 30% or 35, say, is actually controlling volume and actually is explicitly going down there for silver. So you don't change that supply quickly. So you can go to gold-silver ratio at 6.9 and markets overreact. It's quite feasible you could go 1 to 3. A factory can't just start using gold, even if silver spiked more expensive than gold. Now, I'm not saying it's going to do that. I'm just saying at a hyper extreme, they think, listen, we're building with this material. We can't pivot and change for an entirely different. They need time. They need to do new manufacturing things. They have to check. They have to get the metallurgy guys in, the engineers in. Can we do it with this? It's too soft. What would we mix it with? So the scope for the overperformance, you could be 1:3, you could be 1:2. You could trade technically at 1 point equal to or a bit above. That doesn't mean it's staying there for very long, but in the overshoot. But for me, I'm happy when we go sub double digit. I might leave some on for that little bit extra, but that's Play-Doh. That's Play-Doh. You're king already. You're a king already. I'm a king now. You can be a king. Get out there, be the silverback ape, recognize this opportunity. It's probably the last serious quarter, 6 months before we change the structure on the product and the pricing.
Analyst commentary highlights silver's potential for significant upside, with historical price levels and gold-silver ratios providing context for traders. Weighted by volume charts reveal key entry points and profit-taking zones, showing how legacy positions benefit from continuation patterns. With silver largely a byproduct of mining, 60–70%. Supply cannot quickly adjust, allowing rapid price moves during demand surges. Technical analysis indicates the potential for extreme overperformance relative to gold, though structural limits in manufacturing prevent immediate substitution. Traders and investors are advised to watch for pullbacks, patiently enter at strategic levels, and position for long-term gains while respecting market dynamics. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.